Hi, this is Randy Finney with the right side of the chart, and today is Thursday, June 28th, 2018. I want to take a quick look at the broad markets, point out some potential developments. Here's where we're at. We'll start with the QQQ 60-minute chart. This is probably the most important chart that I'm watching right now. We had this, for those of you that haven't seen the analysis, we've had this divergent high back here, started to play out, or it has clearly started to play out. We're getting some impulsive selling. So we had this initial thrust down. We can look at it this way, a couple ways to view this. You had this initial leg down right here to my second target, reversed off the bottom of that second target zone almost to the penny there, and then set up in what could be construed as a bear flag continuation pattern. Now, if so, the measured move for a bear flag, you take the flagpole, which is the move leading down to the formation of flag, measure it to the bottom of the flag, and then you take that line and add it to the top to get an accurate measure. And again, it's just that's a rough guide, but I'll tell you, it's uncanny how often these play out. Um, very close within a few percentage points. So there's a flagpole, and if I add it to the top of the flag right there, it would actually take us down below my third target there, which is still, very much a potential third target zone. But I'll say this: when using chart pattern measurements like that, I'll take a look at the charts. I'll combine various things such as support levels, first and foremost, Fibonacci's, the measured move. But then I'll take if a measured target goes below my a well-defined support level like this, that's where I'd be covering. And I always cover a little bit above support. When you see these unofficial trades, if you're watching this on YouTube, it's not an official trade idea. Although I've been harping on this, I'm short the Qs. I know a lot of people on the site are. For whatever reason, I just never got around to making an official trade. So therefore, I'm covering it here publicly. And I also just want to make mention that on those unofficial trades, I don't try to squeeze out every last penny. On the official trade ideas, I always set my targets on shorts a little bit above the actual support level in case, there'll be a lot of eyes watching that level. You can see it's very well defined. It's not just an arbitrary line that I picked. And therefore, one of two things tend to happen. You either reverse shy or you'll maybe slice through it, fake out some traders. The nature of a bear flag, if it does play out, is you get impulsive selling, and that's something to watch for. Now, that's the bearish part. I have to tell you, right now, I have a little pause in the market here, or at least in the near term outlook, what's going to happen today and maybe until tomorrow. And that is because we have potential. I call it potential divergence. Is not confirmed yet because the PPO is headed lower. If we zoom in there, take a look at the PPO, it is pointing down, as is the RSI. So that means the momentum. These are momentum indicators. However, you can see that prices have now made a new low compared to this previous reaction low, and these indicators are quite a bit higher. So there is potential positive divergence. This is my go-to swing trading time frame. I use the daily charts always. I keep an eye on the weekly charts. I keep an eye on just about all time frames. But these are the time frames you want to position for long and shorts. This was the whole, it was a negative divergence here at the high. We had divergence here. We had building divergence, a series of divergences, but that was a precursor or an indication we'd see a trend change and a correction. Now we have this potential divergence here. So that's what I'm watching for. If we push back up soon, so far you can see what's happened. This is, again, I'm doing the video shortly after the open. It's almost 10 o'clock. We sliced through there today and a little bit yesterday. So technically we had potential divergence yesterday. We went down through there today. Now we're back above it. And what I'm referring to is this 169.70-ish. That is a pretty significant support level and target, the bottom of that target zone. So what I'm getting at is that would be quite bullish. You undercut a support level, you get more, shorts get amped up. They add short exposure. You get the Johnny come lately shorts that didn't want to short up here, but they do want to short now that they've seen this move, and they get roasted if we can turn back up there. And so far we have. We've turned up now. The NQ is up 0.3%. So that's what I'm watching for, and that could thrust us all the way back up here. I mean, potentially up to that 174.14 level, and possibly beyond. It's hard to say right now. We have to watch, see how impulsive this is. So the takeaway from it is my convictions right now in the very near term isn't very strong. Now, one more flip back to the bullish case. I'm giving you glass half empty, glass half full, stuff to watch for. I talked about this yesterday quite a bit in the trading room. There's something what I call the point of recognition. That's where during a correction or a rally after an extended downtrend, either way, you get a point of recognition. What's happened for last few months is bulls have been rewarded, longs have been rewarded to buy back, buy the dip, buy the dip, buy the dip. You're bailed out, and then all of a sudden the market starts moving lower. Okay, they get a little kickback rally. It's not shown here on the 60-minute chart, but if you guys have traded actively, you've known there's been a lot of intraday reversals. But then all of a sudden dips don't get bought anymore. Like yesterday, we didn't see the dip get bought, we saw it get sold into. And then you start to get those longs, they're underwater, or they see the dip buying's not working and they start to sell, and then you can have that quick flush down. Where I'm going with all this is if there is more downside to come, and again, the daily charts indicate that. We've had divergences building for a long time. There may be now, or it may be after another thrust up here. But if these divergences are burned through, I'm referring to these potential bullish divergences. So we get a little kickback rally, but then we fail. And I can, the same levels that were support on the way down, like this 170, 78, are resistance now. That one's not as solid because we didn't have a lot of reactions off it. I don't see a whole lot of resistance there. But either way, if we get a little kickback rally, it looks like these divergences are starting to play out, and then boom, a sudden reversal. I have to say I'm leaning towards this scenario. Won't bet the farm on it right now. I'm still short, but I'm managing my positions. I'm not going to give back too much on my gains, and I'm certainly not adding right now at this point. But I very well may if I see us kind of go back down, take out today's lows so far with conviction, and especially if these divergences get burned through, that's going to be pretty darn bearish. However, I want to say this as well. That third target you see there is lines up pretty well. These divergences can certainly pan out, but just not right away. And that's sort of what I'm leaning towards right now. If you want to know where I'm leaning, um, again, anything can happen. Maybe a little kickback rally here. Look like things will get going, get the bulls amped up a little bit, dip buyers scare out a few shorts, and you need to do that. Too many people are short the market. It's not going to fall too much. You need to get those shorts out. It sets the way for another thrust down, and that would look like something like this. So we come in maybe um, tomorrow or Monday, I could actually see that. Yeah, well, it's early Friday. A lot can happen. Today's only Thursday morning, so it looks something like this. Come on down to that 166.85-ish level, and then reverse, and that would give us bullish divergence. We might even have a little trend line there to look at. So this is what I'm looking at right now. So if I have to pick one or the other, I'm short because I've been short, and that's the trend right now, and I'm not going to get shaken out unless I see something today, bullish green candles, some levels get taken out. I'll have to study the 5-minute charts, 15-minute charts, and all that, and then I'll communicate my thoughts on the site, of course, to the members within the trading room. So that's that. Again, a lot of time spent on this because this is what I'm watching. It's all about the tech stocks lately, the FANG stocks, market leading stocks. And so my primary focus has been on QQQ. But as always, I'll cover SPY. A lot of people ask about the S&P 500. A lot of people trade it. Same story there. You can see this potential, still not confirmed, but potential divergence would be confirmed if we get a bullish crossover on the PPO, and the SPY is just a hair above my target here. I have a target about 268.05. We're not there yet. So, and there's some resistance overhead. I think we'll hit that. I do think we'll get another thrust down. Um, but again, it's not something I would be shorting right now because I look at risk reward. It's not worth it for next, another, what is this? If I measure it out here with the measuring tool, the pop-up box to the left, a 0.5%, 0.4% downside right here versus if we get a kickback rally that I could see going possibly as high as 273.32, maybe 271.21. It's just not worth it. The risk reward doesn't make sense. I don't risk a dollar to make a dollar. I risk a dollar to make three or better. So that's that right now. So I'm kind of in sit and wait mode, holding what I have, and waiting to see what happens today to either add some more shorts, maybe on a bounce, or on a break if it looks like this rally falls apart here. And I think that's about it. I don't know if it's worth covering anything on the daily chart. There's a trend line to watch on SPY. Bigger picture is pretty bearish on SPY, but we definitely don't have the nail in the coffin yet on the short side. I'm looking at this trend indicator. PPO is still above the zero line. That indicates a bullish trend. QQQ again to me is what it's all about. And again, that trend indicator is still the PPO is above the zero line, but we did have, as I've highlighted in recent videos, and this is kind of my driving factor that keeps me more bearish right now, despite any counter trend rallies. You sometimes have to ride them out. They can be pretty ugly, but you can see back here, and again, I've covered this in recent videos. Every single one of the major corrections that we've had, and going back for the last couple of years. Remember, this period from 2017 was a unprecedented low volatility, and so this correction, as minor as it was the biggest correction we had in 2017. And it, just like these, that correction was preceded by a divergent high, then followed by a bearish crossover in the PPO, and you also had a trend line break and a little kickback rally. That was your sell signal there. And again, here we had a 60-minute trend line. You don't see the divergence on the daily chart or the trend line, but that's I was covering, focusing on a daily basis there, and that's when triggered right here. And I posted sell signal on the U.S. markets confirmed, and right after that we get the bearish PPO crossover trend line break, and that was that first big correction. And these were sizable corrections, 10% plus, as most of you probably know. And again, divergent high. So we had the divergent high here, and so far, what have we had? We have even bigger divergence. This divergence spans. It's just an extension of those previous divergences. And so if you try to put it in perspective, so far I'm trying to just grab roughly the top of that, the recent highs. We're only down 5%. So if these two divergent highs led to a 10% correction in those PPO crossovers, it would make sense that there's a good chance there's more downside to come here despite any near-term counter trend bounces. So again, that's what I'm watching for. Fewer things, in my opinion, or from my experience, fewer things are more bearish than a failed bullish breakout or a failed bullish development. For example, these potential divergences here. So if these divergences get burned through like they're not even there and we see impulsive selling, and I'm open to all possibilities. I plan to cover my positions right now at T3, but if we smash through there, I may go back in. It depends how it looks at the time. But again, ideally, I'd like to see a move down to that T3 level, cover a little bit above there, have these divergences intact, and maybe reverse it for a long trade. But a lot will depend also on the daily charts and the weekly charts. Right now, this is a world I'm living in, but I do not take my eye off the bigger picture here. And the bigger picture says if this trend line breaks here on QQQ, get out of Dodge pretty much on a weekly closing basis too, by the way. And there's SPY flirting with its primary bull market trend line. Again, this is why, I spent most of this video talking about the 60-minute charts, but this overrides anything on the 60-minute charts. This is more technically significant. If we get a solid weekly close below this trend line on the SPY, however, that means nothing to me if QQQ doesn't follow, because that would be most likely a fake, uh, a false breakdown, because QQQ is still above trend. So I won't go all in short on the indexes unless both these two big cap indexes confirm sell signals, and that would be a longer term sell signal, by the way, guys. This is long term chart here. 10-year weekly chart. All right, so that's it. That's what I'm watching. And if anything changes, like I said, I'll, like yesterday, when the markets are conducive to trading like this, 99% of my updates are posted in the trading room, and that's what I'll be doing over the next day or two here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.